with Conquer Trading and Investing. If you're new here, welcome. If you're not, welcome back. Today we're going to be taking a look specifically at Bitcoin cycle theory. We're going to give an update, giving the strongest awareness we could give about when the 4-year cycle is dead, what it could mean, and where we're wrong on that. Where specifically I'm wrong on that. You all know, starting out in January 2022, I introduced what I thought was happening going forward with the 4-year cycle. Even more importantly, I said never again will we rely on it. We will monitor it, but we will dig in harder than ever to our technical analysis. That led to CTM 2.0, our mechanical edge. And here we are today. All right, let's start off over here. Obviously, Bitcoin wicking way down over here. People looking and seeing, oh boy, we don't like to see long wicks like that. A lot of other people are probably saying, oh, we have to close the CME gap. My thoughts on that is, well, sometimes it takes a long time for gaps to close, a long time for gaps to close, and sometimes they don't close at all. What? They don't close. Let me just come down and drop to a weekly chart over here. And, there we go. Maybe we've closed them all. This is only from 2020. This is only to 2020. Hold on one second, y'all. I don't even. Oh boy. Oh boy. What do we got over here? I have a little drawing, and there's an issue here. This gap has never closed yet. Bitcoin at 9,640 on the CME is still an open gap. Does that mean that we're going to have to come back and backfill? Oh boy. I'm just seeing when this one was closed over here. Look how long it took for these gaps to close over here. Over here in this area from November 2020, it took 3 years to close those gaps. Just because there's a gap over here, you might have some people that are gunning for them. Some people looking to fade price up out over here, and those people, that could be a while. If it's a breakout, it's going to be a while to fill if it ever does. I mean, they, not all gaps get filled. All right. Nevertheless, let's bring it back. Let's focus in on a little bit what's going on over here today. And we saw over the weekend. I mean, you had to enjoy the weekend pump, and then seeing Bitcoin going as high as $123,000, well exceeding well exceeding my expectations of what the initial breakout would be. Or say initial breakout is the yellow line over here. I said, well, probably right around 119,000 is where the initial breakout would lead. There were more shorts to be had and more liquidations to cause some more pain. Has anyone seen James win? Has anyone seen? If I mean, can you imagine he was just executing off of the moat? He would be right now absolutely roaring in the bliss, feeling the honeymoon. But nevertheless, here we are today. What happens next, right? We have this major breakout. We have this major wake up over here. It doesn't look good, or it never looks good to see that type of wick. And are we going to see a retest? And will that retest take us all the way back down into the extension of what was resistance now? And will we see that held in as support? It could happen, and and we want to hold if that happens. It would be a bad event, in my opinion, to see Bitcoin come in for the retest and for it to fail. And that's why we have this line over here. We know that, listen, if this sell impulse were to trigger at any point in time, that's bad news bears. We not like what's happening. And regardless of what expectations were as we broke out over here, and expectations like ultimately a measured move by the end of the year, we talked about, said, wow, it's really, really high, but all the way 170,000 Bitcoin. And of course, this time of 4-year cycle, this time of the year, as we move into October, November, November, well within range, well within range. I would like to see like I want to leave room over here. That's what I want to see, because the more room we leave and the more we have a runaway breakout, the stronger the move. The stronger the move. So I hope that we don't come down and retest into the breakout. If we do, that's still structurally perfectly healthy and right on time. From a discretionary standpoint over here, I think that it's time to go ahead and move this stop loss over here. And I mean, you have such a nice move over here, a lot of momentum. Um, and I think that, some people see 13% into profit, but well, that might be something I wanna book. But we have a major breakout that's occurring over here. And you know what? I look over here. This is a great learning lesson over here. And we always wanna look and learn. And you can see that here's a breakout, and then you came in for the retest. I remember, you guys remember that we're here. We had this. We had these double lines over here. Why do we have these double lines? Well, just because obviously that's market structure. And look, it tested all the way into here. Do we have anything like that developing right now? I don't think so, but I'm going to take a look and you could see that I just came off into this resistance here. And I mean, maybe, but that's why we have this line over here below. And that's where something ultimately would be wrong. That would be a scary retest, no doubt, if that were to happen. We have a lot of events this week that could cause volatility. Amongst them is tomorrow's CPI, and then Wednesday we have core PPI, and then we have on Friday retail sales. So with sprinkle a little bit of unemployment claims in there, and we got a lot on the docket. And inflation data is something that really, really could move the market. Now, you know, I suppose this is going to sound, I mean, let me just get into it. By the way, we have the total 3 breakout continuing here, looking very good. First, Bitcoin, though, I want to take a look at where you might see. Looks like as Bitcoin has that nice long big wick here right now, alts here taking advantage, pushing against it. Let me go to the daily. Yep, that's exactly what it looks like. And this line would be significant. A break above that line would suggest that alts here might indeed spike against Bitcoin. If they're doing that against Bitcoin, they're probably most likely doing that versus the US dollar. It seems reasonable. It seems, well, it seems reasonable. We're going to take a strong look. It's going to come into cycle theory in just a moment. Um, Again, just highlighting the PPI on Wednesday, the CPI tomorrow. Sorry, that was my misread. I thought this was on Thursday. It's Friday, U.S. unemployment claims and retail sales also on Friday. So it's Thursday, George. Whoa. All right, so we got the trifecta Tuesday, Wednesday, and Thursday ahead. And right now we are seeing equity markets looking wiki on the downside. And we also have, by the way, one more important thing to consider, and that is you saw over the weekend, which to me seemed like a further escalation, specifically with Trump's tariffs. No one cares about tariffs anymore. The only thing people care about is what's going on with the Epstein list. You know? Unfortunate events taking place. Um, but a lot of wicks here on the Nasdaq, and that seems like a major escalation. 30% tariffs out onto Mexico and EU, like I think it was the equivalent. EU is like, whoa, what are we doing here? We need to talk. And whether or not this is just some type of negotiating forceful tactic here, or whether or not it's just going to stand because there are both sides unable to reach any type of actual agreement. I don't know. The concern is, and people are wondering, is that going to hit the market? And the whole reason I brought that up was because as I'm looking at true inflation, I see that, well, that little uptick we were watching has come off significantly. This this week's inflation data should actually continue to be quite welcoming here, and that might give the equity markets here and risk more room to run. However, what about, like, let's just fast forward until when actually, if ever, these tariffs at the elevated rate are instituted? Does the US consumer wind up absorbing more of these costs? Are we going to see an uptick? And when we do, how does the market react? Even if that happens this week, it could go either way. I mean, my expectation is, and I don't even know if I have a good track record on this. I would gather that I don't. I would gather that I don't. But my expectation is going to be that, except for calling the hottest print in July of 2022, and then the rollover in disinflation, but more along more or less on a month to month basis, I would not be betting on whatever my view is, or my opinion on inflation and how it's going to actually come in. But I believe it's going to come in under expectations. It's going to come in pretty soft again, and that might give the market here the ability to continue pushing higher, because it just keeps pushing. We are coming into a week, this starting this week, when we enter into what is for the next couple of weeks, rather unfavorable period for seasonalities. This is ahead of earnings. Earning seasons obviously are going to be a big deal. As always, there's just a giant wall of worry to climb, and we continue climbing that. This is, I mean, if you look over here, 1998, and there's so many similarities to this current 2025 to the 1998. And the reason being is because it's not just here where they both had the 20% drawdown, and they're both coming out to the highest deviation. The prior 2 years, S&P 500 has seen 20% back-to-back gains. That happened also in 1996 and 1997. So there are so many similarities between the two. Will that continue? And if it does, let's just pretend that it does. What would that mean for Bitcoin this cycle? If you were to see equity markets coming out of the 20% correction, and for it to match the 1998 fractal, which, again, I mean, that didn't even get crazy until the latter part of 1999, when, bull markets, bubbles, I should say, in their last gasps, make absolutely crazy gains. We have, just a quick view on, I guess, on CoreWeave. I didn't mean to check in on it, but here we are, and checking in on what's going on Canner equities on the breakout, like Bitcoin, a big wick over there. I was trying to get into and looking for. There we go. We continue here, just coiling. A soft inflation print, that likely has a good opportunity to see bonds be able to put into what would be a buy impulse. That's something I'm watching out for over there as well. And just zooming out, expectations are, until this thing breaks, this massive coil that's been going on now here for a couple of years, whether it breaks upside or downside, it likely has still room to continue its coil. Maybe it doesn't, like, if assuming August 1st we see higher than anticipated actual tariff rates, market right now might still be calling the taco. Oh, where's my head snack? Someone asked that we pull up the head snack and we get back into the head snack, and that would be the perfect opportunity for there. What's my thought on global M2? We've done some really good work on global M2. I don't know if I could find it right in this moment. And it fits in kind of into the conversation. Um, but if you go to the profile on X and you scroll down about a week, a fantastic thread on global M2. And here I can just pull up a chart of it as we speak. And a fantastic thread on global M2. And oh, hold on one second. What's going on with the dollar, which fits well into this conversation? Let me just check what's going on, and look at that. We are getting close right now to what could be a buy impulse. I'm going to argue I'm going to get rid of this thing over here, and on the well, is that resistance? Whatever. I'm just going with the diagonal and closing above it. We're going to have to now, from the last short, flip right back to the buy. And again, most people are quite bearish on the dollar right now. Maybe I could pull up this over here to just give you the seasonalities that we're headed towards by the end of the summer, by the middle of summer for July. So look, longer term, the direction of the dollar, that's like we're in a pretty strong downtrend right now. US dollar off 10%. Today it looks like we're closing with a buy impulse. That is something that we need to be aware of and track pretty regular. The reason I came to the dollar was because I saw uh global M2 coming off, and as the dollar rises, you're going to see global M2 come off over here. Now, Bitcoin could rock, Bitcoin, gold, they both could outperform the dollar. And if you look at what happened throughout from January 2025 up until most recent time, you saw the dollar come off 10%, and then you saw Bitcoin do nothing. It traded at the same level as January 2025. And then now you're seeing the dollar breaking out over here. So is Bitcoin. That's interesting. Anyway, oh, sorry, that's still up here. We'll talk about that a lot more. So the thing about global M2 and the thing about Bitcoin is that you could see over here as Bitcoin corrects 40%, global M2 is still rising. And that's not really much of a help. That's not the only time, obviously. You come into over here and Bitcoin corrects 60%, and global M2, even with the 12-week lead, was still rising. And that's like, what it's rising. What happens if Bitcoin were to correct 40%? Is that such a good read? Is that, look, the thread is wonderful, and it gets into detail. And here's the thread right here. So I'll just put it into the chat and go ahead and bookmark that. Take a look at it, and it tells you why it's a poor indicator that lags at the top. And it goes on to talk about why monetary base total is actually the best predictor. However, the problem with that is that, you know what, like the Fed only shares that data delayed a month. So that really doesn't help as well. So that's my thoughts on global M2. And let's talk about Bitcoin. Let's talk about the 4-year cycle. Before we do that, let me actually go into our positionings. And by the way, still tracking here, silver at $38. Beautiful, beautiful to see. We have a couple of charts to talk about this week, including gold cycles, silver cycles, lengths, and expectations. So we'll talk about that later in the week. I just want to just jump over here onto the dashboard for us to take a look. I saw that sailor over here, Gray, is saying that, well, they copied Dog Nation's dashboard, and I mean, because it's such a good look. Sailor over here talking about strategy.com with their new features and stuff to play with. Very cool. Dog Nation over here, same thing. We got the current Ethereum trade here is continuing to run 17% into profit. Solana remains on the sideline, and the question is it going to? Now, buy side boost crew, it doesn't matter. That capital that would go towards Solana continues to be allocated into Ethereum right now. So that's working out very well. Cardano, new entry, up 6%. And Bitcoin bull runs up 21%. And then you can see all of our 8-hour swing trade iterations up 7.8%. NVIDIA on the daily is up 15.5%. Tesla is the only one on the daily that currently remains out of the market. It's getting a little close, but it's still very far away. Well, it's getting close. We could see if equities are able to continue their move. Tesla potentially getting ready to join the party. FANG is in drawdown, minus 3%. on that late ticker entry, and TQQQ is holding a position 26% into profit. MicroStrategy 11% into profit, and IBIT, the Bitcoin ETFs 9.7% into profit, and it's beautiful. And then just take a look over here at the buy side boost, and Solana's allocation is right now still being held in Ethereum, and Ethereum and Bitcoin holding those open positions. And then if I could get a restart over here or a refresh over here, we could see that Solana is currently the only one out of the market, as Bitcoin, Ethereum, Cardano, and also Sony mentioned. Yeah, and that was pretty similar as last time, as the Fed stopped QT. They did begin balance sheet expansion. And the question is, first of all, when are they going to stop QT? And when they do, are they going to go to a pause of the balance sheet, or are we going to begin seeing that organic, as Powell put it, organic balance sheet expansion, and which was a melt up type situation for risk, a melt up type situation for risk. That's the situation. We had a rising dollar, we had a rising gold, and we had rising Bitcoin. Let's take a look at Bitcoin cycle theory and get an update and make sure that we understand, first of all, what our expectations are from here moving forward. When actually we could say that something has absolutely changed, 4-year cycle behavior is dead, and where we're wrong, where it hasn't changed at all. And do we continue to see those cycle after cycle of diminishing returns and strong 4-year cycle behavior? We still always the halving tracker. Big shout out over here to Bitstein and all the work. It was beautiful to see. One thing that I just want to point out on this chart over here right now is that prior to where we are now and going back, we've seen cycles last period go from over here. You saw that 2020 cycle was outperforming the previous, and then they switched over here during the summer of 2021. Summer of 2021, Bitcoin pulled back to 30,000. We said by the end of October, it would be trading at a new all-time high. I don't know how that happened. Wave one into wave two, we never had the move into the blow off top. We did not have it back then, and that's the point. We said, well, forget 4-year cycle theory. We're gonna make sure that we stay aware of it. But here's what's likely happening: is that we're just exiting, or hoping this is the chasm. Do we make it out of facing reality stage? What happened here? US government went from a wild card of being a fear of could put like some prolonged pain into Bitcoin, moves to widely embracing it. And then we saw the entrance of Wall Street as the spot ETFs have been launched. And sure enough, Bitcoin has made it out of the facing reality stage. Bitcoin trading now above $100,000. It's on everyone's radar, and it's undeniable. Let me go ahead and just jump back into what we were talking about over here. And one thing that I want to point out is, from this stage forward, from where we are today until the next halving, it's never happened where a cycle has been able to outperform the previous cycle. It's never happened before. And specifically after day like 600, it's going to get even clearer. Now, one thing did happen. You could see that last cycle, this had the best push up. Then, like, this cycle ended roughly 50% off of the low and the high. This one was 60%. This one over here was about a little less than 50%. I think it's 40%. And this one over here, it entered the halving at all, taking out the previous all-time high. Major clues to already the changing nature of the cycle. Let's start off. We're going to track from Bitcoin since the halving from the cycle low, and then since the all-time high, then we'll move into what could be happening next. All right. So this is what we're going to start off with. And um and ETH is like, I imagine the frothiness of ETH, assuming Tom Lee is able to launch his micro strategy of Ethereum. And when they begin accumulating Ethereum, like we Bitcoin already has that consistent strong bid, not from retail. And when I say retail, I don't mean retail. I mean like the small corporate bids, 50 million, 300 million, half a billion, things like that. If Ethereum starts gaining significant bids from corporates as well, raising money out in the debt markets and then purchasing Ethereum. Ethereum, obviously a way smaller market cap, will have room to run. Did you notice? And if you didn't notice, I just want to like remind you over here that you have not yet hit the like button. And if you enjoy being here, go ahead and do show a little bit of love. Smash the like button. And if you're not yet subscribed, do subscribe. Briefly, Bitcoin took the number 5 asset, top asset by market cap in the world, overtaking Amazon. Right now, Bitcoin just falling below it. We don't have our eyes on Amazon or Apple or MicroStrategy or NVIDIA. We're looking for first the second spot and then eventually taking the number 1 spot from gold. Do I think BlackRock's holding is enough to manipulate? So when we talk about BlackRock's holdings, um, like they're the issuer of the ETF. They're not holding the Bitcoin. Now there could be some type of craziness to ensue if, for example, like remember like the block wars, and like they hold the keys to all that Bitcoin, and that would be manipulation on a massive scale if there could be like a potential backdoor attack. I would think the greater concern is like, does Coinbase have the corn, right? And I would just think that's like the greater risk out there. Does like could you imagine some type of Mount Gox, some type of FTX fiasco that had to do with Coinbase? That's something that I'd be worried about. But BlackRock is a bad actor. They're a bad actor. Right? There's nothing else to say about that. Larry Fink believes that you should have the ability to confiscate your property. That's the way it is. Awesome. That's why we went to the market caps. Thank you, Ace. The Ethereum is a significantly smaller market cap than Bitcoin. All right, let's take a look. So I'm going to remove, first of all, over here, the Genesis, from Genesis to the first halving, and get that over here. And then we have the 2012 to 2016. And can you imagine the supply shock? Look when they have the miners reward. Look at the immediate vertical launch it had into price. I mean, that's the halving and the 4-year cycle right there. And then it went into this pattern that we love talking about, because Riot right now is in the midst of just looking to break out from it. MicroStrategy just broke out from it. And here's Bitcoin with that major move up, then the mega drawdown, but it's really just a major consolidation, and then that second launch up. So we get rid of that one too. That was way different because actually the having of the miners reward had a massive supply demand shock into the market. And then as we move into the most recent cycles, there seems to be a lot of symmetry, including that they both did peak roughly within days of each other. We'll call it, just like to be simple, I'll call it something like 35 days, but whatever. Very, very close. And they also bottomed very, very close together, which is very interesting. Now, this current cycle that we're at the halving is different. And it's different in so much as that you can see that this cycle over here, which is the blue one over here, you're again, we were roughly about 50% off the high and the low. And this black cycle, the current cycle we're in, there is something majorly different. Is that as it entered, Bitcoin's at an all-time high. It had taken out the cycle high, you know, it had taken out the cycle high as the halving comes in. So it's starting from an elevated point. And then you can see over here, it went into that really long consolidation pattern. And then the major breakout after the election, bringing it back in line with what past cycles are. And so that's major things to point out. You could see early on how important the having of the miners reward is reflecting in price. You could see since then that it took roughly 6 months for the having of the miners reward to have an effect on price to be able to send it to a new all-time high to where we are right now, where price was already at a new all-time high prior to the halving. Those are shifting dynamics that are taking place in the 4-year cycle when looking at it from the halving. What about in looking at it from the cycle low? So, and again, I'm going to remove the Genesis. I'll remove Genesis from all of them. And then you have the 2011 to 2015, and I'm also going to remove that because this is for me, and even in a lot of our modeling, like we were like, okay, like this is early, like not only hype portion of the cycle, but like that major volatility we were seeing during early facing reality. And we believe that not only has facing reality offered different volatility, that continues now into this new regime that we are right now. And coming off the cycle low, I like the top, but coming off the cycle low, there's a lot happening over here that resembles the past cycles behavior. And so this is how many days out right now off of the low. That's roughly 950 days because I want to see how many days away. And if you look from 950 and then to where we've seen both cycles peak has been about 120 days, 4 months. 4 months from now, that's getting to us, that's placing us right in that same area into the end of the year. And if you remember on Friday session, I said, look, like we'll be generous by January 1st, 2026. This will mean that this current cycle is the longest running cycle to date. At that point in time, people are going to have to begin like saying, look, am I aware of the changing structure? Now again, we're giving, or I'm personally giving awareness points for where nothing has changed. 4-year cycle continues to dominate, and you see cycle peak happen at the right time. And I think that's even a lot more important, that whether or not there's any type of blow off behavior. Because again, I don't think there's any type of blow off behavior coming into the end of the year. And the only thing that I think that could cause a blow off behavior, or a steeper angle vertical ascent, would be if there were to be something like a major adoption catalyst, such as the Bitcoin Act being passed. And I think that if that were to happen, that's not going to cause a sharp price appreciation and then a sharp like depression, recession in Bitcoin. Actually, that's going to bring on further big bids, and we're going to see a further continued lengthy ascent. That's my opinion. So I don't think it's so much important about whether or not we have a blow off into the end of the year. We sure didn't 4 years ago. And I think what's more important, do we see that cycle behavior where, guess what? You got by the end of the year, Bitcoin's top. Next year, next 12 months after that, we're heading into a bear market. Whether or not we have something like uh a 70 or 60% bear market drawdown people could speculate on and things like that. But that's is the main focus over here. And that's where we're looking, and they line up whether you're looking at the halving or since the cycle low, that these cycles on the 4 year cycle theory have peaked around the same time. I love looking at the cycle high. This is the one that you see over here, the cycle high. And we're just going to go ahead and look at it through this lens over here. And so this gives a little bit of a different, uh, you know, as far as length, right? So from where we are right now until the previous cycle, we saw that there was roughly that same window over here into the end of the year. But if you look at what happened in the 2013, 2017, this has the potential here to run for quite a while longer. So let me just do some rough math. That's 100 days, 100, little less than 150. Hold on, y'all. 1350 to 1480. Not really, right? That puts us into the end of the year as well. So that's interesting. That puts us into the end of the year as well. So there's not really that much of a difference in looking at from the cycle high. And what I was interested in now in that cycle is because there are some similarities between that particular cycle. I'll show them to you right over here. Is this? Look at the length of the consolidation, and then that big strong move up. Now the major difference here is when it leaves. So here's that long consolidation, and right here it leaves, and that sets up. Remember, I said like something that could set up a steeper angle ascent, a Bitcoin, like some type of major Bitcoin adoption catalyst, like the Bitcoin. Then you would see that steeper ascent form. And I mean, this one is significantly different in length. It is just a reminder, roughly 683 days, and we're like on roughly day 900 now, 888. So the length is much longer, and the sustainable angle still is well into effect. um I don't think it's gonna be over for a long time. I I mean, we went through just a major hurdle, the April meltdown across markets on Liberation Day, tariffs, and then since then, that great disturbance in the forest and unknown, we've seen a V recovery. There is potential catalyst being put in place over here where the US is trying to go full speed ahead into growth. And then there is the one that Lynn keeps honing in on over here, and Lynn does say over here, she's like you've heard her saying a couple of things. Nothing stopped this train, and she's saying like when deciding if it's different this time or not, it's important to have the right baseline to compare to. The baseline that she's giving us to compare to is she's saying the fiscal dominance that we're in is indeed different than the monetary dominance that we have been in. And then she talks about how that part is not that much different. Maybe tomorrow we will tomorrow get into the differences of these past periods over here when we're adding into a similar regime that we are today. But I do have an airport run to do. So I want to finish the topic of the cycle theory today, and then we'll move into that one. So bringing it back over here, like another, we are in, again, is it different this time? And I could say, well, 4 year cycle dynamics are different. Look, we hit an all-time high because of adoption prior to the all-time high, and it wasn't the halving of the miners reward that caused Bitcoin roughly 6 months later to hit that new all-time high. That's different. Lynn's pointing out we're in a different regime this time. That's different. The adoption is much different in so much as that we've entered in an early majority, and everyone around you, it's blatantly obvious now. A year ago, I was screaming, retail's irrelevant. It doesn't matter. It's now the corporates. Today, there's a new corporate being launched every day. and it's glaringly obvious to everyone that something different is going on with the adoption. Again, my own expectations are that I don't believe that we hit any type of blow off outside of an adoption event, which means that we're going to see price likely trading well under the mean, well at the lowest deviation. And then not only that, another thing different that we're going to see is going forward into the summer of next year that we're now at a higher place than we've been. And you could see it over here. Like we're going to end up for the first time ever, any cycle crossing above the previous cycle from the 500-day mark over. Those are markers that I'm given for you to say, okay, there is a changing structure and it's blatantly obvious. Another one we have is January 1st by the end of the year. No other cycle has gone further than that. That would be, and it's specifically we're in the sustainable channel still. That's another marker. Now we could break out to the upside. If we break out to the upside, I do think that we're going to see an acceleration in price to the upside, and we could break down. And ever since we called the bull market breakout in 17,250 in December of 2022, it's all we've been looking for. Not like how long it'll go, but if it's ever invalidated, and we keep on going. Those things could happen that would change, but assuming neither one of those things happen soon, we continue in this sustainable channel. It's sustainable because the longer that we stay within it, the longer. Look at this. Do you guys remember the tech lead? I remember from 2019, the tech lead guy was super funny on Bitcoin. I mean, you can watch a clip here and there. He just put out a post here, and look, first of all, I was very clear. We could break to the upside. We could break to the downside at any point in time. If that happens, we know what that means as far as us adjusting. He's pretend they don't. He gives a good visualization for the next 2 years. We talked about the 1998 fractal on equity markets and how out of the April correction, we continue to track that extremely well and have been tracking it for the last 2 years. So imagine that continues. Imagine that the current Trump administration is able to engineer accelerated growth. And imagine the AI narrative, like everyone's like, watch capex spending. Are they continue to spend? Like I'm watching Zuckerberg blowing away capex spending on hiring of talent, spending over $100 million per employee. I mean, it seems like that is not going away. That has the potential to accelerate over these next couple of years as well. And if they're throwing fuel, lower rates, you know, tax cuts, trying to get everything going over here, it's possible. And he's saying like if that channel does continue to 2028, we're looking at $1 million Bitcoin in 2028. I mean, guys, you saw the video I did when I talked about people's expectations into 2028 are way too low, and I gave precise I don't want to say targets because they're not targets, but potential of where we could be around that time. So that's what we're looking at today. And I think that that does a really good job in relaying what I wanted to today. And that is the changing dynamics of the 4-year cycle and ultimate, like there's one thing to say over here. I think the 4-year cycle is going to change and then say, okay, well, we made a new all-time high prior. That's different. Look, by the time we passed the January, if we're able to continue this forward momentum, and then we end up going towards an area that something looks like similar to this, where we then come next summer are above previous cycles, at that point in time, it's very clear to anyone who's still embracing the 4-year cycle at that point is they're just off sides and wrong. Now we don't know that all this is going to happen. We have a couple of markers to watch out for: a breakdown or a breakout would suggest accelerated price behavior coming, which means that sooner than later, outside of a major Bitcoin adoption event that's coming to an end. But more importantly is let's watch what happens as those past cycles have peaked into the end of the year, and let's watch the price action around that time, and we will look for any de-risk events, because maybe I'm completely wrong in my read about what's taken place, and maybe we're continuing to see massively diminishing returns and also right on time 4-year cycle ending, bear market ahead, and the only thing that you could say is likely the volatility during that bear market outside of Coinbase not having the Bitcoin and blowing up, or is likely going to be reduced somewhere between 60 and 70%. We're gonna be taking a love hearing the silent majority. Love the silent majority. Tomorrow, tomorrow we're gonna focus in a little bit more on gold and as well as silver, and we'll be looking at previous cycles, and then talk about, you know, what expectations could be. And then I guess one of the things that I say that could derail and send us into a prolonged accumulation or consolidation in gold right now would be that if we did see actually indeed this move into growth, but then again, you have to factor into what we just talked about in Lynn's talking about, well, if this time is different, I think you have to have the right baseline to view that lens, and that right now is fiscal dominance versus what used to be monetary dominance. So tomorrow we'll take a look at that. Tomorrow we'll take a look at that, and we'll continue our conversation. Right now, I have to run to the airport. So I'm going to say, everyone, have a beautiful day. God bless you. And I'll see you all back on the inside. Actually, I'll see you all tomorrow, and then we'll take it from there. Have a beautiful day, everyone.